Good day, ladies and gentlemen. It is Thursday, August 3rd, 2023. I'm here with Charles Funk. Charles is the CEO of Heliostar Metals, HSTR in the venture, HSFXT, I think, on the QB. They put out a news release this morning that probably, might seem a little bit vague to some, but I mean, I'll give you a little bit of background here for what's happening. Uh, there are several steps that Heliostar is working its way through to essentially change the previous feasibility uh, scenario for their Ana Paula high-grade gold project in Mexico from an underground operation from an open pit operation to an underground operation. There's a bunch of steps involved in that. One of those steps will be sort of reconfiguring, revisualizing the deeper resource and coming up with the basically the best mine plan for this. And those of you that know mining, and even those of you that don't, will understand the logic behind what they're trying to do here. I mean, if you're underground mining, the biggest advantage between underground mining and open pit mining, as my late brother used to say, you can't stope an open pit. You basically got to take the shape and the grades you've got. You start at the top and you dig your way down, and that's just how it is. Underground, you get a lot more flexibility because you can decide how to put the workings in, where and at what depth to start mining, and what order to mine things in. And part of what Charles and his team are hoping to do here is to order the underground mining in such a way that you push a lot more of the high grade ounces in the first year or two. And anyone that understands net present value calculations for any project understands that the more you can push cash flow to the front end of the model, the better the numbers are and the quicker the payback is. So, I mean, what you put out today, this is not based on your new drill. You basically took the grade shells and the grade blocks from, I mean, your feasibility study from earlier this year, which was really just taken from the earlier one. And tell us, tell us what you're tell us what you're trying to tell us here, Charles. I guess is what I'm asking.
Yeah, you're heading in exactly the right direction. So, as you touched on, the change between going to open pit to underground is, this is one of the rarer scenarios where the underground has a cheaper upfront development cost than the open pit. You don't have to pre-strip a lot of the waste material on the side to get to the high grade because there's a decline 800 meters away that we've just got to extend in. And so if you can be in the original mine plan, you're mining a lot of low grade material, a lot of 0.3 to 1 gram material to get to the high grade. The topography is a little bit steeper than that graphic looks because as you come out of the section, the hill comes up as well. And as you said, you're forced to go top down. We know that if we could mine, 8, 9, 10 gram material up front in the mine life, that's huge for the economic impact. And so what you're looking at on this graphic is on the left, you see the shape of the mineralization in Ana Paula. The low grade in sort of the 0.3 and the plus in green, and then grades that are likely to be more amenable for underground mining, 2.5 grams and up. If you look at the chart on the right, it's matching it level for level or 25-meter elevation step by elevation step and trying to break down as if you're sort of just taking a flat slice through the deposit.
Okay.
And so you can see that zone that's the high grade panel and how many ounces are there at the open pit and resource cutoff for the PFS or at different increments just on a color stretch. And you can see that there's a lot of high grade material in the area of the high grade panel in the current PFS resource. And you're right, if we can mine, if we can, if we will, so what we're doing with our mining scenarios is looking at a number of different cutoff grades. And whatever that cutoff grade is, the higher that is, the more ounces we can bring in. And you can look at this chart. If you see, if you had a 2.5 gram cutoff grade, it's much higher. A 5 gram cutoff grade, you're talking about 100 to 150,000 ounces on some of these levels of very high grade material. That when we deliver the updated resource and the rescope, we'll be at the front and center of our mine plan.
And I guess, I mean, obviously the logical thing to do, to my mind, if you're a miner, you take your decline and you basically bring it into the bottom of that area, the area around 700 meters elevation, where you're at the bottom of that, and you mine your way up, because doing it that way it makes things a bit cheaper in terms of operating costs. I'm a little curious about the expansion zone too. I mean, that obviously wouldn't have been something, that wouldn't have been a focus under the previous mine plan, because there's no way you're open pitting down to there. So is that something that didn't really get as much love and attention from the past workers? I mean, is there room there to actually grow that, just because it hasn't been drilled much?
Yeah, and usually both your comments are linked. So the decline's already down at the level of the 800-meter RL, and it's only
Oh,
about
okay.
800 meters away. So you're spot
Okay.
on. We've almost got to just go flat across.
Right.
The reason that decline was putting in is related to the expansion zone. A previous operator wanted to drill off the deeper parts, this expansion zone that's open. And so they were a third of the way into that decline. Unfortunately for them, their operating mine in Nevada was losing money, and it sent that company to the wall. Um, that was exactly their thesis: is the expansion zone's open. Let's put a decline in. You don't put that in unless you've got a lot of confidence on what you can potentially deliver. So the expansion zone remains open. It's one of a number of targets for us that we'll start to talk to the market about in the coming sort of 6 weeks. For example, that hole, like 11 meters at 4 grams, doesn't have another hole constraining it. So definitely open, and we think we could add ounces. As you touched on, none of our drilling this year is in this. This is the 2023 PFS resource. So
Right.
we'll be able to add ours to this in November, and we expect that to improve it, given the improvements on the model that they've delivered. And then we can start to look at stepping out in areas like the expansion zone.
And so where are you at with the drilling now, anyway?
So we've completed 21 holes. We've the most recent results. Actually, I might jump presentations if we can. Just confirming you've stepped across with me on this, Eric.
Right.
Um, we've released 8 drill results so far, and the most recent were in this area, in the up plunge area here. There was a gap in here that this hole drilled 24 meters at 8.8 grams. So we think we've infilled this gap. And then we
Right.
got some nice expansion in this area here and this area here with hole 298. So we're expecting more results shortly, from 299, 300, 301, and 302, that have the potential to create a continuous panel if we're successful. We put in our most recent press release before this one, and we got some good sulfide mineralization, so we're optimistic about those holes. And then we move down and we're drilling in the down plunge area. We've got up to 50 meters that we can add high grade down here. So that'll probably be later this month, early September. And then right now we're actually doing a really tight spaced defensive holes in this area here. We need that for the variography in the resource estimate. So we've got more up plunge holes than some down plunge holes, then a couple more infills. It'll take us, I think, to about 21 holes completed so far. And then we might take some exploration shots beyond there, from sort of September onwards.
Okay. So, and what else do you need to to deliver and, I guess, report on to be ready for this sort of new PFS? I mean, what are the other pieces of data?
Yeah, to roll into. So today's press release covers this mine update and the potential for us to bring materially higher grade through than the PFS mine plan envisaged.
Right.
We'll have results, as I just touched on, through to
Yeah.
probably late September, feeding the resource update in November. So that's probably a really key step before we step into the feasibility study. And then the other big catalyst is the network. We're busy working on that. We expect to deliver that in September and report that in early October. That's the first network that's really focused consistently on the high grade part of Anapola. We've been very conservative, so we think it has the potential to improve on that. And it obviously affects the cutoff that'll feed into the resource as well, because if you get more recovery, you can mine to lower grades because you're getting the gold out. So a number of key catalysts in the second half of this year that then push us into next year's feasibility study.
Okay. Okay. So, I mean, today's news is I guess it's reiterating to people, or maybe introducing people who weren't following it before to the rationale here. The idea is to set up something where it's high grade. This panel's got really nice geometry. It's subvertical. It's quite thick in most places. It's the type of thing you should have fairly low cost per ton in terms of underground mining. Uh, that that plus the metallurgy plus some expansion, should allow Heliostar to deliver an updated pre-feasibility slash feasibility study, I guess this time around, that would be significantly higher NPV. That's basically the process that Charles has set up here. I don't, it's a little tricky to throw numbers around in this stuff for Charles and not get himself in trouble, but you look at all these different steps, it's not that hard to visualize an increase in PV in the order 100%, 200%. I mean, it's not small. This is pretty significant change in NPV compared to the previous open pit scenario. And probably at the end of the day, it may actually be lower capex because open pits can have pretty heavy upfront costs when you start throwing in stripping and everything. So, I mean, this looks really good, Charles. I mean, this looks like a really, really good underground mine. And how do things fit in? Um, how do you fit in the timeline for, I don't know, re-permitting? And I'm not even sure what you're dealing with here. I mean, is this re-permitting? Is it altering a permit? Is it a new permit? I mean, have you gone back and forth with Severnet on that?
Yeah, so it's a modification of the permit. So the nice thing that Annapurna has, as part of that 75 million that was spent before we acquired it, is that it's permitted for open pit mining. The decline is permitted as well. So we can extend the decline into the ore body. We can build all the infrastructure on the current open pit permit. You just can't produce produce ore on this permit as it stands today. The nice thing from us is we're modifying open pit to underground. And I can point to sort of half a dozen examples in the last 12 months in Mexico where underground permits are being granted through the MIA process, the environmental impact assessment process. So our plan is you don't want to make multiple changes to your permit as you go. We're getting all our ducks lined up so at the beginning of next year, we submit the modification to that permit. So we're expecting to have our feasibility study completed and our permits in hand at the end of next year to make that construction decision. It's tough at the moment to get open pit permits in Mexico. So
Yeah.
the modification that we're making is fortunate for us, but the easier scenario to play out.
Okay. Yeah, and then so by this time, by late-ish next year, you got a new feasibility study, you got a new permit, and you're ready to go. You never struck me as a masochist, so I'm assuming you're expecting someone else to dig the hole after they buy it from you. But we'll see how it goes. I mean, you guys will be well set up. It's going to be, to me, this feels like something that's going to be very bankable. I don't think it'd be particularly difficult to line up money for this, given what it looks to me like the numbers are going to look like. Okay, I mean,
Yeah,
this looks great. I mean, I don't know. Do you have anything else you want to point out or make sure people are paying attention to when it comes before we sign off here today?
no, I think we've put out some pretty spectacular drill results that show the potential. I think we'll continue to do that. So I'm looking forward to more releases on the drilling. I think the key is we've laid out a plan earlier this year. And we're a month late with this because of the financing and some great drill results we put ahead of it. We're meeting those milestones and it's delivering how we thought it would. So it's always nice to get that positive feedback as you tick off the boxes in the rescope.
Yeah, so far everything seems to be going according to plan, which is not the usual MO for the exploration and development business. Anyone who's been in it for a length of time will tell you that. Okay, great story, strong management team, excellent project. Heliostar Metals, HSTR in the venture. This is definitely a story you should be paying attention to and you should be on if you're not yet. Thanks for coming by, Charles. Great to get another update.
Thank you, Eric. Thanks, everyone.